Insurance, the Ringo Starr of the financial services industry. Or, if you like, insurance. It's like a dentist. You might not like it, but you'll be happy that it's there when you need it. Welcome to the first of our three-part series on insurance with Elite Risk Acceptance's CEO, Christelle Colman. Christelle's going to tell us all we need to know about insurance and hopefully how we can get the best value for money. Christelle, thanks so much for joining us.
Thank you.
Right, let's start at the beginning with motor insurance. What are the components that make up your motor insurance premium?
You know, we look at the area where you live. That's because we have higher crime areas in certain parts of South Africa. We look at the value of the vehicle. We look at the engine size of the vehicle. So if you want to buy a car for your young child for the first time, you consider the fact that the size of the engine and the value of the car will impact on your insurance premium. We do look at gender.
Oh, really?
Yes. It's in most insurance companies factor gender into their rating methodology for vehicle insurance. And the reason is statistically, globally, women make for not better drivers, but for less risky drivers. So women would typically drive slower, have fewer accidents, and be on the road not late at night. Some of the interesting things that we look at is color of vehicle. So in South Africa, a black car is higher priced than a white car. And it's because individuals who drive a black vehicle, normally it's the fast vehicles, you know, it's a higher risk profile. That's what we found with our actuarial analysis.
Interesting.
You know what else is interesting is we look at marital status, because we have found that when guys get divorced, and women, but mostly guys, when they get divorced at like age 35 to 40, all of a sudden they're on the road at night, going out partying, and they have more accidents.
Oh, well, I thought it was more men fighting with their wives and then driving off.
No. Oh. So marital status does definitely come into play. And then a very important consideration, and that's across all lines of business, is your credit score. And people don't understand this. So credit score, also it's a global rating factor. What we have found is that your propensity to cancel your policy and to claim is directly linked to your behavior when it comes to your credit record. So it's very important that you must remember, if you default on your credit on your payments, that it will probably have an impact on your insurance.
I did not know that.
Yes.
Okay.
People don't like that.
Yeah.
They say it's unfair. For us as insurers, we say this is how we do an assessment of your risk profile, and people who have got good credit scores make for better insurance clients, so you will pay less. We also look at number of years that you have your driver's license. So in the old days, we said age of driver. Doesn't work like that in South Africa anymore, because people get their driver's licenses for the first time when they're 35 years old. So we look at number of years that you've had your driver's license, and we definitely look at your claims experience. That is also a major factor, and it's very important for people to realize we live in the digital age. You can't hide from your claims anymore. All the insurance companies share their data into a central data dispository. When we load a quote, we pull that information out and we see all the claims and accidents that you've had over the years. So you can't hide from that, and your number of claims. So something else that changed is we used to have a claim-free group or a claim-free bonus. That's sort of falling away. We look at the number of claims that you've submitted, which leads me on to the last point that I want to make is in South Africa we have a problem in that we don't have compulsory third-party insurance.
Right.
And it becomes all of our problem, because the reality is 7 out of 10 cars on the South African road are not insured. So if you had an accident, whether you were responsible or not, it's important if the other party was insured. Yeah. So if you were not responsible, let's say a minibus taxi drove into you, he doesn't have insurance, then you have to submit that claim against your insurance policy. It counts as a claim against your record. So there's no way that you can get away from it.
What are the biggest mistakes that people make when they set up their motor insurance policy?
So I think, the biggest mistake people make is they drink and drive. If you ask me about insurance in South Africa, and then they get out of the car and they run away and they think they can get away. I think people underestimate the power of being a consumer in a consumer-driven market. So they think, for instance, that direct insurance is cheaper than being with a broker. That's wrong. You have to shop around. If you want to get the best premium for the best cover, you have to shop with the direct insurers, and you have to get a broker to shop on your behalf with the intermediated insurers. So people think it's cheaper to go direct. People underestimate how much of a negative impact it has on your premium to claim. So people claim for small things. I've got a little scratch and dent.
Yes.
I put a 2,000 Rand claim in. Your increase that you will get on renewal will probably be as high, if not higher, than the cost of the claim over the next 12 months. So that's something that you really have to consider. And then, unfortunately, because it's a complex process, the biggest mistake that's made is people look at bottom line premium only. They don't consider the level of the excess and the restrictions that are written into the policy. They normally only find out about that at claim stage. So then they're out of pocket, claims are not covered, they don't understand, they're upset with the insurance company, it's a grudge purchase, like you said in the beginning. We get blamed as insurers where it's the consumer not doing the process, proper due diligence and proper understanding of, what the restraints are. Something very important to consider is excesses. So if you start getting into trouble financially, and a lot of people are under severe financial pressure, rather look at increasing your excess than cancelling your insurance policy. So if you can't afford to pay your premium, then rather go to to the place of having a little bit less cover, but at least if your car's written off, it's stolen, or it's hijacked, you will get paid out the lump sum to settle that amount with probably a finance company. So increase the level of excesses. And then the last sort of resort of, if you really are battling, or if you are very successful financially and you want to do a bit more of risk management where you don't transfer all the risk to the insurance company, insure your car for third-party fire and theft only.
Should your car insurance on a particular vehicle reduce every year as that vehicle gets older?
Yes, because the retail value of the car does come down. Don't expect your premium to come down.
Why?
The cost of repairs go up even though the value of the vehicle comes down, and that's where insurance companies are paying most of it.
Why do the cost of the repairs go?
Because most of the parts are imported, so the impact of the dollar-rand exchange rate impacts on the actual cost of the parts. Labour in South Africa gets more and more expensive every year.
Does an individual get a better rate if they have all their insurance with one insurer?
Definitely. We look at the portfolio. We do cross subsidization. We give discounts if you bring everything to us. So it's with motor insurance is substantially loaded if it's motor only. So if you've got only your car insured because you think that's going to be cheaper, you're making a big mistake. Insure it with your contents and your building if you can.
What would you say are, at the various price points, are some of the brands that are notably cheaper to insure?
For us, it's about the cost of repairs.
Right.
So you know which are the cars that are cheaper to repair. It's the big brands with the high volumes of...
High volumes is the key, I think.
Yes, so those cars are typically cheaper to insure. Yes. Your more sophisticated brands, your lower volume brands, they are more expensive to insure because it's expensive to get the parts here. We don't always have the parts in South Africa. It takes longer to repair. For the insurance company, it means longer car hire because it's a 6-week or 2-month leeway until we have the vehicle repaired. It's more expensive.
I had an old Alfa about 15 years ago.
Terrible car.
And I worked out the sum of the parts was worth about 5 times more than the car itself.
Yeah, and it's more expensive to insure.
And it took 6 weeks every time the tail light went out.
So it's more expensive. So if you go for the sort of high volume brands, the Toyotas, Volkswagens of the world, Nissans, you'll find that they are cheaper to insure, even though they are a little bit more attractive to the hijackers.
How much do you think people can save if they do everything right?
Oh, you can save a lot of money. We see in the elite space, people are, wealthy individuals are insured with certain direct insurers, not correctly insured. They come to us, they can save 20-30% on substantial premiums. Our average premium that we have in our business is around about 5,000 Rand a month. But some people pay 20-30,000 Rand a month premium, and they can save a lot of money with higher deductibles, with getting the cover right.
Christelle, thanks so much for demystifying the motor insurance for us. Very, very useful. Thank you so much.